Hi, everyone, and welcome to the week ahead. I'm Tony Nash. This week, we are joined by Tracy Shuchart, Albert Marco, and Sam Rines. Thank you guys for taking the time to join us this week. It's been a pretty volatile short week, and there are a number of things we're talking about. First is Natgas. We've seen Natgas come off pretty dramatically this week, and we're going to talk to Tracy about whether or not we're going to see Natgas below $3 soon. Also, the Fed pivot. There's been a lot of statements from the Fed, and Sam's covered that in detail. So it looks pretty dead, but we want to find out from Sam what's going on. And we've also seen a lot of coverage of, or a lot of commentary about a multipolar world in the last week or two, which sounds like 2006 era rhetoric or something, but we're seeing a lot of that kind of rear its head again, and we want to talk through that with Albert. So thanks, guys. Tracy, let's jump into it with Natgas. Natgas is down something like 63% from its high in late August. I've got a price chart on the screen right now. The average price before Q2 of 21 was in the $2 to $3 range, $2.60 or something like that. So only have 7% more to fall below $3. So, you know, we've seen it rise with every other commodity in 2021, but of course, with Russia invading Ukraine, you know, we saw that spike up. So Russia and Ukraine are obviously still at war. And then we have this issue with the Natgas, an LNG terminal in Texas with Freeport. So we've got that story from Bloomberg up on the screen right now. Can you tell us what is behind that Natgas price fall, and what are you looking for in that market for that to stop?
Well, you know, first, again, Freeport, since you already put that up, right, which went down in August. And people have been waiting for that facility to reopen because it's an export facility, right? And what happens is that since that facility is shut down, that landlocks U.S. Natgas. So that pushed downward pressure on prices in U.S. Natgas. And so originally they were supposed to reopen in October, then it was November, then it was December, and now it's mid-January. And so that does contribute to a lot of problems. We're also seeing warmer weather right now in the EU, and stocks are full in the EU. So this market has become very complacent. That said, we're looking forward. There is a cold front coming in, I think, January 22nd. To the EU. It's supposed to be really cold for a few weeks. So we'll kind of, what traders will be watching is to see how much does their build bring down during that time. But again, yes, the markets have become very complacent. They think that they're indicative that this crisis is over, but that's not necessarily true. We'll have to see this winter how much stock is brought down in Europe due to cold weather. And you have to remember that in 2022, half of their storage came from cheap Russian gas pipeline, right? And so looking forward to when we have to refill this, they're going to have more expensive LNG coming in. And that takes longer and it's more expensive. And then we look at US export capacity is still not built out enough for the contracts that we actually signed with the EU. So that may put pressure on US nat gas, but that would put upward pressure on European nat gas.
So does that pressure, does it drive the price up, or does it just hold the price steady? I mean, you know, is there a mean reversion at some point where we go to, say, 260 or 270 on average, and kind of some of these weather issues and restocking just kind of maintains it? Or do you expect things to go back up to $9 or whatever?
You know, I think we could see a spike again. Again, there's a lot of mitigating factors in this market right now, and we really have to see how much is pulled from storage in Europe at this point. And, you know, hopefully Freeport is supposed to open mid-January. we'll see if that happens.
Okay.
But that would relieve a lot of the downward pressure on prices in the U.S. market, because it would open us up to being able to export that.
We also saw the Japanese buy a U.S. nat gas company this past week, right? Can you talk to us a little bit about that?
Yeah, absolutely, which makes sense. I mean, Japan has been one of the largest natural gas importers in the world, and they're very concerned right now about energy security, as most countries are, particularly in Asia. They've had some problems with their deal with Russia because they have a joint project together, and due to sanctions, there are some problems involved in that. And so I think that was a very smart move, again, for Japan to kind of secure energy. I mean, they're looking forward, much more forward than I would say Europe is.
Okay, very good. So it sounds to me that there's not really anything decisive coming up in the near term to change the direction, but the magnitude may slow. Is that?
Yeah, I mean, we're technically speaking, we are very oversold at this point. That said, what we really are going to have to be looking at, or what traders should be looking at moving forward, is, do we have this reopening of Freeport mid-January, and this cold front coming in? If it does, traders will be looking at how much draw is going to happen in Europe of those stocks.
Okay.
Not to mention, Tony, that the planting season for 2020, late 2023 and 2024 is coming up in fertilizer. You need nat gas for fertilizer, so that's something else to look at. I'm not sure exactly how much it weighs on it, or a bullish case for nat gas by any means, but something to keep your eye on.
Right, but we have had some fertilizer volatility over the past couple of years, right?
Oh yeah,
and especially after the Russian invasion.
Yeah, I've been a big Mosaic fan, which is a phosphate play. But also nat gas is the other component on the other side for the fertilizers that they use.
Great. Tracy, what's your thought on fertilizer?
Yeah, absolutely. I mean, I think we've seen that obviously pull back, but we're heading into planting season again, starting in the spring. So again, that's going to be another factor as far as nat gas is concerned. And the fertilizer analysts that I've talked to say they expect another price spike coming into about March.
Yeah,
Okay.
I believe also there's going to be a price spike on the fertilizer front, because the soil that the farmers haven't used can't sit, as from what I'm told, can't sit around not being used for too long. So 2023, 2024, they'll have to be replanting those fields.
Interesting. Okay. Well, good to know. Thanks. Thanks for all of that. So let's move on to the Fed. Sam, you've put out a few notes this week about the Fed and the Fed pivot. Obviously, you've been saying for about 9 months that the Fed pivot is kind of wishful thinking. You've said it over and over and over again, and there hasn't been a lot of kind of listening to it, or people really haven't heeded that necessarily, as we see kind of run-ups and hope that we'll see a pivot. But Fed minutes were released this week, and you pointed out no member saw a need to raise rates in 2023. So that from your newsletter is on the screen right now. So you've stated many times that the Fed has been very clear what their indicators are. And on our screen, we're seeing what you've said many times, that it's VU and nominal wages. So vacancies and unemployment, as well as nominal wages, as well as core services, excluding shelter inflation. And those have been very clearly stated by the Fed chair in his briefings. So why is it so difficult for people to see these things that seem to be very clearly stated by the Fed?
Oh, I mean, it's personal preference, right? It's the presuppositions and the initial conditions that you want based on the way you're positioned, right? So our brains really like to be correct. So if we can convince ourselves that the Fed is doing the wrong thing and should do something else, and ignore the Fed will do something different, then it makes us feel a little bit better. So I think that's part of it. But I do think that there's something to be said for when no member of the FOMC sees the need to cut rates in 2023. That should be heeded. I mean, that's a pretty one-sided trade. And, you listen to some of the members of the Fed this week, Bostic, who could be considered one of the more dovish individuals, he was still somewhat indeterminate between hiking 25 and 50 at the next meeting, when the most dovish member that I can kind of come up with, or one of them, it doesn't know if they're going 25 or 50. That's problematic, right? That's something that I think people are somewhat ignoring, particularly market participants, is that the Fed is not pivoting towards being dovish at this point, right? The narrative that they have put out for the last 6 months has not changed. I mean, it has been very consistent, and it has been very clear that vacancies to unemployment is a problem because, because one, when you poach people, you have to pay them a lot more money. So instead of call it, the ADP report is really intriguing because they release what the pay raises are for people who aren't switching jobs. It's somewhere in the 7% range. And the people who are switching jobs are getting 15% pay bumps. So the differential there is somewhat stark and somewhat shocking. I think that is somewhat underestimated by people when they look at what's going on in the labor market. We have had a very good year for job creation, and we just finished it off with a number that was well above expectations. And you can kind of nitpick and say, well, the average hourly wage was only up 30 basis points, 0.3%. And that's a positive for the Fed. Well, yeah, it's only going to be up 0.3% because the vast majority of jobs were created in lower paying industries. I mean, when you create jobs in leisure and hospitality, those are below the median. So you're going to drag down the wage growth just naturally on that front. So I think a lot of it is going to be evolutionary for the Fed, right? They're going to have to evolve their rhetoric at some point, but they're not going to do it yet. And they're certainly not going to do it before the February FOMC meeting, and they're probably not going to do it until after the March one. And that to me is probably not priced in at this point. And what's really not priced in is the Fed just not really caring about the data until sometime in early 2024.
Yeah, so you mentioned that in one of your newsletters, I think it was yesterday, talking about the on Thursday, most recent employment report. You talked about the Fed being stuck in the middle. And literally you put some maps, which I put on screen. Employment in the middle of the US could be a factor that keeps the Fed from slowing rate rises, or at least from kind of pivoting. So, why is the middle so important? We get so much coverage of what's happening in Silicon Valley or New York or whatever, but why is the middle so important? And why is the Fed paying so much attention to the middle?
Sure. So the regions to the west were the only ones that lost jobs, according to the ADP report, which is pretty interesting. And the rest of the country made up for it in spades. So while all the tech layoffs get a lot of headlines, you never really hear about the opening of XYZ plant in Kentucky or Tennessee, or the building of a plant in Tennessee, right? Those don't get the headlines that, Facebook laying off a few thousand people get. And quite frankly, who cares about a bunch of people getting laid off from Facebook? They probably shouldn't have had jobs in the first place. I'll say it about Alphabet. I'll say it about all the tech companies. They overhired, and they overhired in the wrong areas, and now they're laying them off. I mean, that's what happens. It's called the tech cycle. It's not that difficult. But middle America is more than making up for it, and it's making up for it in spades. And I think the Fed actually might be getting caught by the middle of the country, and it's kind of the revenge of middle America, right? Middle America always takes the brunt of the BS from the coast in terms of being dominated on monetary policy, being dominated on economic policy, and now they're the ones kind of driving the ship. And I think that's really underestimated within people's frameworks, that when we're isolated to New York and California and see people getting laid off, that doesn't really matter to the Fed, as long as it's being made up for by people in the middle, and people in the middle are making more money and they continue to spend. And there's a lot of states in the Midwest, and call it just the flyover states. There's a lot of states with a 2 handle on unemployment, a 2 handle. So if you want to hire people in middle America, guess what? You're going to have to pay up. If you want to hire a tech worker on the West Coast, maybe you don't, and that's what's going to get the headlines, but you're going to have to pay up in the middle.
Well, you may not have to in terms of the rise on the West Coast, but the wages there aren't necessarily coming down. Are they on the West Coast?
No, they're not coming down, but
Right.
it's all about wage growth at this point.
Right.
As long as, you have a pretty sharp deceleration, you have some people on the market to, to hire, that's important, right? Nevada and California have two of the highest unemployment rates in the country.
So is it fair to say that the middle is not, say, perfectly, but in some extent kind of catching up with the coast in terms of, say, real wages or something, or no? No. Okay. Okay. So it's still pretty cheap, but
Still cheap.
Just wage growth.
Yep.
Okay. Very good. What else are we missing? Because you have been consistent on all of this, and you have, for anybody who's either listened to us or read your stuff for the last 9 months, could have seen this play out pretty much exactly as you've laid out. So what are people missing? I mean, I think the Fed's been fairly boringly consistent, and you've said they would be, and that's what's happened. So are there any lines to read between that we should be looking at right now?
Yeah, so I laid it out about a week ago that I think what you really want to look for is the Fed going from a hawk to a grackle, hawkish to gracklish. And if you live in Texas, have lived in Texas, grackles are the worst birds ever because all they do is squawk, they wake you up, and you can't shoot them. They're not like doves. So just play that all the way through there. But grackles are an incredibly annoying creature. And when the Fed goes from being pure hawkish to really starting to grackle up its communication, squawk, 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 you have no idea what they're looking at. You have no idea what the metrics are. That's when they're getting ready to pause and pivot. And frankly, we have seen none of that, right? And until the Fed process is not hawk to dove or dove to hawk, it's dove, grackle, hawk, hawk, grackle, dove. And until they really begin to confuse their messages, they're not changing shape, and that we simply haven't seen them begin to change shape. I do think that sometime this year, probably in call it the May to June timeframe, that's when you're really going to begin to see the grackles come out, and a lot of confusing language about what they're watching, a lot of confusing talk about the balance sheet, a lot of confusing talk about the future path of Fed funds rates. And that's really when I'll get a little more bulled up on a Fed pause and the length and the structure of the potential to pivot. I don't think there is a reasonable case to be made at this point that the Fed is going to cut in 2023. If there is a credible argument, it's that the Fed breaks something and has to cut a lot, right? So it's a little bit of a, call it a convex play here, that if the Fed does cut, it's not cutting 50 basis points, it's cutting 200 or 300. And on the other side, if nothing bad happens or nothing very bad happens, the Fed's just going to hold it there. So I think there's a little bit of skew here.
Great. Okay. Thank you.
I had one question. Yesterday, we had the Fed, George came out and said the Fed, quote unquote, Fed still has a lot to learn about how balance sheet policy works. Can you explain that to the audience? And would that not be one of your grackle birds? What is it called?
Yeah, no, I think it was actually George just being honest. I think we had this conversation a few weeks ago, Tony and I, with a guest, that the Fed really doesn't understand or doesn't have quite the concept to pinpoint exactly how much tightening or additional tightening to Fed funds quantitative tightening does. That's what George was getting at. She's a little bit behind the curve there. The Fed does have a proxy rate that I pointed out earlier this week in a note. The Fed has a proxy rate that they publish that's sitting at about 6.4%, give or take. So it's about a 260 basis point spread, 2.6% spread to the current Fed funds rate. I think that's something to kind of pay attention to, is that the Fed does have measures. I think it's more that if you're out there talking all the time, it's difficult to get into the math.
They're not stupid. They're just annoying at times.
Exactly. They're not stupid. They're really not stupid. They know how tight they are. They know they're sitting at about 6.5%, 6.4% on an overall tightening basis. They don't care. That's number one. They don't care that it's that tight. Number two, they're going to continue to do it until they actually achieve their mission, right? And it's a multi-pronged process. And as long as markets seem to be fixated on what's going on with the Fed funds rate and not going on with the entirety of tightening, that's going to continue to be an issue for them. Like today, when everybody's like, oh, look, we printed, 223,000 jobs. Maybe this gives them reason to pause because average hourly earnings didn't go up that much. Guess what? I mean, you can't rip markets 2% and have financial conditions loosen like that and have the Fed go, yeah, I think we're accomplishing our mission. Inflation's still high and unemployment's at 3.5%. Yeah, that sounds like a great time to pivot. Yeah, no, that's the dumbest thing I've ever heard.
Right. Yeah. Okay, that's great. Speaking of stupid, not you, Sam, Albert, let's talk about multipolarity.
One of my favorite topics.
Yeah. So we've had a lot of op-eds and research notes and tweets over the past week or two stating that the future is a multipolar world. And this seems to be based on a lot of talk about the decline of the US dollar or the rise of the petroyen or something like that around Chinese crude purchases from the Middle East or whatever. So, Albert, you put a series of tweets out, which I'm showing right now on screen about this. Very diplomatic as you always are. So can you walk us through this and help us understand what's going on? And I'm going to try to play devil's advocate as you lay out.
No, that's fine. I mean, you can play devil's advocate if you want, but even though when it comes to multipolarity, it's not simply a financial or economic thing that you need to look at. There's multiple variables, including legal frameworks of the nation that's issued as the currency issuer, the military strength of the reserve currency issuer. I mean, there's multiple variables for it. And for some reason, we have these economists that come out and say, oh, well, the petro-yuan is coming into effect, and that's going to destroy the petrodollar, and therefore the dollar is going to fall, and blah, blah, blah. I'll let Tracy get into the petro-yuan stupidity first, but, the dollar is simply the lifeblood of all trade in the financial system. You're talking about, it's like, for me, it's like taking out your blood in a transfusion and putting in Mountain Dew and saying, oh yeah, everything's healthy, you're going to be fine, the whole system's, raring to go. It's a dumb argument. It just boggles my mind how people can sit there and even claim multipolarity when there's literally no alternative on a global scale for anyone to dethrone the dollar.
So let's take this bit by bit. Okay, so a lot of these people are saying that the CNY will become more powerful, partly on the back of crude coming out of the Middle East and crude coming out of Europe that could be denominated in CNY. Okay, so let's take that, Tracy. Can you talk to us about the Shanghai benchmark for crude? How successful has that been?
Not at all. Even the futures market hasn't been successful. It's
what percent of world order oil, just as a wild guess, do you think is traded on the Shanghai benchmark?
2%.
2%. Okay, and it's been around for how long? 2 years?
Yeah, and if you look at their futures market, which has been around since 2016, we're still only seeing that domestically traded. You're not seeing big players come in and hedge like they do with WTI or Brent. So that aside, China came to Saudi Arabia with a suggestion after this summit, the latest summit that they just had, and said, yeah, we would love for you to, we could trade this on Shanghai and this could be traded in yuan. And Saudi Arabia still has not yet come back with an answer. And so everybody jumped to conclusions saying it's a petro yuan. Saudi Arabia is giving up dollar denominated oil. This is not true. I've talked to a lot of people in Saudi Arabia about this. I've talked to a lot of journalists. I actually had a spaces about it. So this is not true. And even if Saudi Arabia did decide to sell some oil in yuan on the Shanghai exchange for whatever reason, all that would happen is they'd be paid in yuan and instantly change this into dollars. Nobody wants yuan.
It's
so let's dig into that. Wait a minute. Let's dig into that. Why does nobody want CNY?
No, because it's not globally traded like the dollar is. Everybody wants dollars. People don't want yuan.
It's not freely convertible, right?
At all. right? And especially if you're in an emerging market with USD denominated debt,
Right.
you want yuan? Nobody wants yuan. Nobody wants yuan,
Okay.
right?
So we just started
Right,
talking
and it's
about,
not, and it's also, it's not really free floating, right?
it's not at all. And so,
No.
so we
It's a
talk
closed
about
account.
crude and the ability for the Chinese to purchase crude. We talk about their currency, CNY, but behind the CNY and the lack of convertibility is the PBOC, right? China's central bank.
Right.
So ultimately, if you trust a currency, you ultimately trust their central bank. So is there a basis for people globally to trust the PBOC? And that's a sincere question. It's not a cynical question.
No, I don't think that, well, I think people are not trusting central banks anywhere, but especially in China right now, people don't believe what's going on in China right now. People haven't believed the data in China right now. And so again, there will be a small amount of oil traded globally in yuan if China wants to do so, and another country chooses to do that, right? Russia has, India was brought up for them, but that's a very small 1 to 2% of globally traded oil, which is certainly not going to put the yuan in a position to overtake the dollar in
Right.
oil traded markets.
And something I'll point out is the PBOC has literally at times used numerology to determine their benchmark rate. Okay. I mean, this is so for people who go down this path that the CNY is a rising currency. If you're going to trust a currency, first of all, it has to be convertible, but second of all, you have to trust the central bank. And you can't have people using numerology. I know we all complain about the Fed, right? But at least there's a standard approach and there is a level of transparency as to the way decisions are made, right? Everybody knows what the Fed says, what minutes are released and all that stuff. But when you have a central bank that has at times, and it's rare, but at times, use numerology by raising by anything that ends in 8 or whatever, something like that. I mean, this is just stupid. And it's not a credible central bank when those sorts of things are happening. Okay, let's go on to multipolarity to have defense. Okay, so is there a defense to enforce decisions that are made? So does China or whatever other multipolar places that these people are talking about have the ability to enforce their decisions overseas?
No, none whatsoever. I mean, even to take the Saudis as an example, right? The Saudis rolled out the red carpet for the Chinese, and the petro yuan argument started coming out all over research papers. But what will happen when Iran decides to press the Saudis once again in Yemen, or just through airspace violations and threatening missiles? Do you think that Riyadh's going to run to the Chinese? Are they going to run to Moscow, or are they going to call up the Pentagon and say, "Hey, we need more, Patriot missile batteries. We need your support."
You tell me and why. I think I know the answer, but I want to understand why. Why are you saying?
Because the U.S. has the most advanced military hardware there is on Earth by far.
Right, but why would they not call, let's say, the Chinese?
I mean, do you want an effective defense system? I mean, what do the Chinese have for defense system? Are the Chinese able to put Chinese troops to defend against Iran if something happens, or against the Yemenis? I mean, they've failed in every single aspect in China.
So just some basic questions. Does the PLA have the logistical capability to get their resources to Yemen if needed?
Zero. They couldn't even invade Albania if they wanted to. That's how ridiculous it is.
I'm sorry.
Well, how are they going to move? How are you going to move 250,000 troops across the world?
Right.
You have no ability. The Russians can't even barely invade Ukraine that's on their border, and we're sitting there talking about multipolarity. I mean,
Right.
if for an example is the United States took out Manuel Noriega, that's because he was in the Panama Canal area and he was screwing around. If that situation happened, do you think the Chinese or the Russians could hop on over there and take it out? They couldn't. This is a silly.
Unless Noriega fell out of a building, which is plausible.
Well, that's the Russian way to fix things, but I mean, this is just a silly conversation, and I have no idea where this multipolarity is coming from, unless it's investment banks putting their analysts out there to help their clients get out of gold or get out of crypto or something, with the whole death of the dollar thing coming. It's stupid.
Sam, what are we missing on multipolarity? Is there something that we're missing from this discussion on either side?
I don't think we're missing much. I mean, there's always the want for multipolarity if you're not the United States, right? Everybody wants it. But to the point, you have to have a credible currency. You have to have an open account. You have to be willing to have a deficit, a trade deficit, period. And you have to have incredible military and defense. And guess what? In this world, the only country that ticks those boxes is the US. And if Europe ever got its act together, maybe it could have the military part. But I mean, that's it. I mean, you don't, China simply does not have the capability to be a global, we call it an offsetter to the US dominance. That's simply what I would call a fantasy, at least for the foreseeable future. Could it become one down the line? Maybe. I mean, we were all concerned about Japan 20 years ago. Look how that worked out. We were concerned, and then we were concerned about the euro. Look how that worked out. I mean, it happens
the United
on a
States
cyclical
of Europe.
basis. Yeah, it happens on a cyclical basis. Every 20 years, we come up with a new thing to be concerned about on the multipolarity front. And, every single time, nobody has the willingness to do what the US does. And somebody called it the exorbitant privilege. Right, it's not right. It is actually a pretty big load to bear, particularly on the military and spending front. So I think that's wildly overlooked. And I think the other thing that's overlooked is oil for dollars will persist for a meaningful amount of time. Nobody wants oil for trinkets.
Right.
And another thing, I have to mention, does China even want to open up enough to be the world? They like to be shrouded in kind of the secrecy, right? And
they have to be
a secret, whatever. If you're world's current reserve currency, you have to be completely open to the world, and they don't seem to like that.
Well, part of it is they don't want to be embarrassed. They don't want to be seen to be making a mistake. It's easier to point out other people's mistakes. If they had transparency and they made a mistake, it's embarrassing. If you remember, I don't know, in 2015, they tried to devalue a little bit. They messed up and they way overshot. And it was really embarrassing. And then they did nothing for like 4 years. So, they don't want to be embarrassed. That's a huge issue that they have.
These are all complexities that have to be taken into account. And like Sam said, is there's only one nation at the moment that ticks the box. And listen, I'd be the first one to throw out warnings, red flags if there was a competitor stepping up in the US's shadow. That'd be the first person to say this, but just not right now. It's just none of the components are there at the moment.
Right. And I mean, having said all this, I don't want this to sound super pro-American. Like, we're all Americans, and I think we can all agree that the US is kind of a lumbering idiot around the US at times. Like, we're not trying to say rah US. We're just saying the pragmatism of the moment is this.
Yeah, there's so many different details that have to be looked at. And I spoke with Mike Green on this in our podcast, in our spaces. It's like, the United States has water, has geography, is isolated from the rest of the world, has a military, has this, has that. It's nothing to do about, rah America. It's just the way things have been laid out at the moment. We're lucky in that.
So if anybody's watching and has a counter argument, please let us know. Honestly, we want to hear it and put it down there, and I'll try to talk to Albert and see if he can come back to you. You may be careful what you wish for, but we'll try to get Albert to come back to you. But let us know, seriously, if there are valid counter arguments that encompass all these issues, just let us know in the comments, and we'd love to engage. So guys, thank you very much. Really appreciate your time and all the thought you put into this, and have a great week ahead. Thank you.
Thank you.